you're 9 months into your next year and you're only just seeing those results that maybe you had in your head as being, oh, I've broken even, or I've made a bit of profit, but actually in reality, oh, how did I make a loss?
If you're only speaking to your accountant once a year, you are running your business blind, and that is a very dangerous place to be. For years and years, I've been supporting UK directors with a whole range of things. And one of the common denominators that I see is businesses failing, not because they're bad at what they do. They fail because they don't get the right advice from the right person at the right time. Now, in this interview, I'm going to be talking to Varsha Sababathy of Athena FM Services. And we're going to be talking about what the top mistakes directors are making, what the simple things you can be doing to give your business the very, very best chance of success in 2025. If you are relying on a conversation once a year, expect cash flow nightmares, HMRC arrears, missed opportunities, and ultimately financial disaster that could have been avoided. So, welcome to the Director First podcast, Varsha. Thank you for joining us.
Thank you for inviting me, Chris.
Oh, it's a pleasure. Listen, I want to dive into this really. Accountants, directors, sometimes, it's as if sometimes we're speaking a different language. So if you could give me some advice to the small business owner that's watching this, or even the large business owner, what is it they should be asking their accountant to do for them, and how regularly should they be asking them to do it?
I would say the one thing that they have to avoid is the assumption that they can wait all year, get their year-end results, and then be in a better place with regards to planning for the business and looking at the way forward with the business. They should use their accountant. The accountant is literally there at the end of the phone to answer any question they might have. And that's the relationship I have with my clients. I tell them from the start, I don't mind whatever the question, just send me a message, pick up the phone, and I'll answer it. If I don't know the answer, I'll let you know. But they've got a touch point throughout the year rather than just once a year at the end. When the year is actually finished and there's nothing more they can do.
Yeah. It's like, listen, it's done and dusted then, isn't it? So, let me just dig in something you just said there about planning. Okay, if you're a business owner, this is going out in February 2025. Let's imagine that we want to set a plan for a business this year. What are the questions that you would be asking that business owner to try and set the right sales?
Well, one of the things I actually do with several of my clients is we set an annual budget. An annual budget is a fixed point in time. However, it is a view of what you're hoping to do with your business in the next 12 months. So we sit together. They focus mainly on the turnover, the income side of the business. I'll focus on the overheads because I have visibility of that from their accounts software, from what they've been spending on. I will ask the difficult questions. I will say, are you sure about this particular income stream? Or are you being a bit, over cautious, for example? I'll work it both ways. Are you being a bit over cautious with this particular client? Don't you think, compared to based on what they earned last year with it, that there's the potential to earn a similar amount and even uplift? So I will ask those questions, and together we'll come together with a budget, a month by month budget with comments, so we know what our assumptions are, all on a spreadsheet, which you'll find, Chris, I love. I love spreadsheets. And it's amazing when they see the finished picture, even if it's just the first draft, when they see it there on paper, and they can see, wow, so if I made this income and I had this sort of staff base, this would be the outcome. This would be my profit or my loss. And it's then from that first draft we can start tweaking things. adjusting things, amending things. And at the end of maybe 3 versions of it, we have a finished product. And that's our starting point for the year. Then, throughout the year, we adjust that. Some clients, the smaller ones, will be happy with just that budget. But the medium-sized clients I work with, they want to see the moving picture, the forecast as we progress through the year. So, we will actually do management accounts. We will adjust that budget to become a forecast, a rolling forecast. So every month they complete is replaced with actual figures. They then update the forecast for changes, because the budget was a point in time, and we might be 3 months, 4 months down the line now, and suddenly they know, well, actually, I need to recruit someone, or I need to do more advertising. So let's put some money into that budget, in that forecast. And what is the result? Are we still in profit? Are we still meeting the margins that we want to meet? So yeah, I think if I was going to give anyone, any of the directors I work with advice, it would be, don't wait for those year-end results. Do some planning and forecasting throughout the year.
Because it's too late, isn't it? Once those accounts are filed, and I've always learned from my own bitter experience, and I share this very very openly, is I was that type of business owner that never really understood numbers. It was as basic as, well, I know it cost me about that much to open the door, so as long as I make about that, everything else in the middle, okay, it's, we're doing okay. That is how I've run businesses in the past. Now, thankfully, I don't do that today. I learned from bitter experience, because when I was doing that, I was constantly stressed. Another VAT bill had come. I'm thinking, like, bloody hell, where's that come from? And or that corporation tax would drop in, and like, or doing lots of business and thinking, where's this bloody money? And I'm no good at the credit control side of things. So over the years and years that I've run my own businesses, like today at 42, I think I am now, I've started to learn a few things, but I've never until recently sat down and worked those plans out. It would always be, I'd listen to something inspirational and set a goal and go, right, we're going to do this year. And that is about as far as it ever went. Okay. So that's just wishful thinking. What you're saying is right, well, let's get that, blue sky picture, but it's actually working a plan to how you get there, going a little bit granular. And since I've done that in my business, it also gives me a lot of comfort, because I know things are achievable. And I know if I hit these revenues, then I've got these type of profits, as long as I can keep my costs. So it's like it's a story, isn't it? Hopefully it'll be a success story.
And it's giving you targets. It's so easy to just be sucked into your business and not realize actually you've forgotten why you're running this business. This business is to make a profit, for you to have a successful business. And when you have targets, a view of the future, the next 12 months, it's something to work towards, isn't it? And when you meet those targets or exceed them, it's tap on the back, I think. And, there will be months when you don't meet the target, because everything varies throughout the year. You can't say, I am going to finish the month exactly as per budget. It never happens. But if you can explain the variance, why it happened, then it's more acceptable, isn't it?
And those numbers don't lie, do they?
No.
It's and I think if you can do, and it's always, but all boils down to having a good relationship with the person behind the numbers that generally isn't the operator of the business, I find.
Yeah, and it's having someone who can sort of look at the business from a different perspective, because I work with so many different clients with different backgrounds, and it amazes me time and time again. I'm so impressed with what they do. They are experts in their field, but they also have an ability to run a business. But that doesn't mean they have to be experts in every area of the business. That's why they need people like myself, accountants, or a marketing person, or an HR person even, because they're experts in their field and they can give you that extra level of help and support that they need.
And you know, I've been in that position before where, you know, I was, certainly when I've been setting businesses up, or even in the early years of doing this, I know what I am good at. And it's generally client stuff, thinking, strategy, you know, right? Well, obviously in insolvency, there's a lot of moving parts. But what I found myself doing is I was such a control freak and I was frightened, you know, like nobody does it better. And I was making an absolute hash of everything else, you know, whether that was bookkeeping. Again, something I've really struggled with, it was credit control, you know, because I remember times where I was so grateful that somebody had given me some work. I'm like, oh, I don't really want to ask them for the money yet.
To be paid.
Yeah, sounds a bit desperate. Desperate at the time, you know. And I read a book called The E-Myth by Michael Gerber, and it sort of talked about, it was really why most small businesses fail, because people, the general path will be, I don't know, like I say, let's say you're a good plumber and you get really good at it and you go on your own and you get quite successful. But then you've got to go out there and you've got to do the quotes, you've got to do the billing, you've got to do the collection, you bring on some staff, you've got to deal with the HR issues, you've got to deal with the marketing, you've got to deal with the sales. And before you know it, you are now not doing what you're really good at. You're doing the stuff, in my case, that I was really crap at. And that's where things start to unravel. And it's like, when would you say somebody needs to start hiring in, Varsha? Because that was the problem for me. It was like, no, can't afford to do that, can't afford a bookkeeper. I'm going to do it all myself.
I mean, I think, again, you know, with visibility of having a budget, a plan, you can work out actually at which point you need to recruit. You know, when you are unable to do all that work yourself, yes, it would be easy to say, oh, I need some help. But actually, if you can't afford it, you can't afford it. But if your budget's showing you, well, actually, I can afford it at month 4 or month 6 of the year, then plan it in. You can plan it in. It'll give you that reassurance that, oh God, I don't have to do it all myself for the whole year. And and then obviously it's all about what level of support they're going to be, what experience they're going to be. Are they going to be an apprentice? Are they going to be medium sort of experience, or are they going to be a senior person with a lot of experience? So, but all those things, you have more visibility of it and ability to plan it in if you have that budget of the next 12 months.
So it's go back to the numbers,
I mean, it's the worst thing, Chris, is if you recruited someone and then found out you couldn't afford them. That would be the worst thing, I think. So you need to make sure you can afford them, obviously.
And you know, like, I know people are very scared of making the wrong hire, but I mean, you can get someone in, can't you? And you obviously don't have to pay them till the month end, and you could give them a 3-month trial and go, right, well, you know, it's not that much of a big risk, isn't it? Either they're going to come in and going to impress you, they're going to do what you've asked them to do, or you can let them go.
So having that contract, having that probation period, it's all important. It gives you that you know, that option if it doesn't work out, as you said.
Now, with regards to, we keep coming back to the numbers because most directors that I speak to, I don't ask them this question, but I don't need to. I've done this long enough. If I was to say to them, have you sat down with anybody about putting a plan for this year? The vast majority are going to say no. Now, would an accountant, and we're definitely going to get your details and dropping them into the show notes here, Varsha, but the standard accountant, I'm not even sure that they would offer that service, would they?
No, they wouldn't. And I suppose that's where I'm different in what I do. I mean, I trained as a financial controller. Now, when I say that, everyone thinks Thomas Tank Engine fat controller or something like that. That they don't know what a financial controller is. But what it is someone who effectively knows the ins and outs of the whole finance function, whether it's the bookkeeping side, whether it's the management account side, whether it's forecasting, payroll, everything. They're very hands-on, and that's what I always wanted to be, and that's what I trained to be. And if I said to someone, what you need is a financial controller, because you want someone, one person apart from yourself, to have that ability to see the big picture and the detail. And, directors of businesses, amazing people, they have so much up in their heads. And you think, wow, how do you know that? But they don't always see the big picture, as in, what's actually happening with the books, the accounts. And that's why they need someone who can look at it and tell them and report to them on those figures.
Do you know what most people are scared of, though, Varsha? Is they think you start saying finance controller, fractional finance director, CFO. You mention any of those names to business owners, and a lot of them, the first thing they go is, can't afford that.
Yes, exactly. And that's very important. That's very true. I've always said I never wanted to be a finance director. I don't think it's necessary to have a finance director unless you're a big company. Nowadays, I don't even call myself a financial controller. I'm just an accountant. I'm just not just an accountant, but I'm an accountant. And the reason for that is, as you said, the word financial controller or director scares people. They think it's expensive. What I do is not expensive. My son's always telling me I don't charge enough. But for me, it's the enjoyment I get from the work, the satisfaction I see when I see a client, a business growing, where I've started with them from day one and they've grown, and we've seen that progress. But with someone like myself, you can ask for management information. With someone who does your year-end statutory accounts, they're honestly not interested in things like day-to-day bookkeeping, payroll. They might do at a stretch, but they are not interested in doing management accounts, budgets and forecasts. It's just not. It would mean they have to have more involvement on a day-to-day basis in the business, and they're just not interested in that. And that's where people like myself, who do want to have that involvement, come into play, really.
Here's the problem, though, is lots of directors think every accountant, as long as you're, whatever that you're paying them that monthly fee or they get a bill at the end of the year, they think that's what every accountant does. They don't realize that they're all separate functions. And, obviously these videos are watched by a good number of people. Some of them are going to be listening and going, I don't know what she means. So listen, what's the statutory stuff? Tell people the stuff. What's the bog standard you're getting from an accountant?
So bog standard is you will get year-end statutory accounts, the legal accounts that have to be filed with HMRC and Companies House. They will take your data that is usually stored in some sort of account software, and they will take the results and convert it in their own software into statutory format for filing. Honestly, Chris, and I'm not putting down anyone when I say this, it doesn't take that long to do. Yeah.
It's useless for a director. It's absolute. There's no real use to that director when they get those accounts, because they're looking at something from bloody.
Gone. It's done.
Yeah.
There's nothing you can do to change. You can maybe use the information to say what I won't do next time, but
sometimes it's too late.
Yeah. Yeah. And when you consider you don't actually have to file those accounts up for 9 months after your year end, you're 9 months into your next year and you're only just seeing those results that maybe you had in your head as being, oh, I've broken even, or I made a bit of profit. But actually, in reality, oh, how did I make a loss? What went wrong? It's too late to make those changes and decisions because it's 9 months later.
And just so people know, that statutory stuff is probably going to cost them what, £1,000 to £3,000, depending on who the accountant is and the size of them.
Yeah. And unfortunately, you know, a lot of the accountants that will be doing that work for the clients are high street accountants who have overheads and staff, and it's going to cost you. And they are the kind of accountants who enjoy and probably do a lot of audits. Audits are for bigger companies where they legally have to have their books inspected. When you're a small company, you don't have to have that detail of inspecting. You need to produce those statutory accounts and file them, absolutely, but you are not required to have an audit. And so the cost that is applied for the year-end statutory filing, I sometimes feel is a bit too high for some companies, and it's unnecessarily high.
Yeah. I get it. But so people are watching, that's what you know, if that's sort of what you're paying your accountant, that is all you're going to get. They're just going to give you the statutory stuff that you've got to do by law. But Varsha's mentioned a number of other things that are really like the important things, you know, to make. You can't make decisions on your business on the statutory stuff, or it's very difficult. Sometimes it's too late. You never want to have to pick up the phone to me, okay? But you talked about bookkeeping, management accounts, forecasting and budgeting. So we sort of talked about budgeting. So what is bookkeeping?
Bookkeeping, well, bookkeeping is literally taking all the invoices, whether they're customer invoices or supplier invoices or staff expenses, and putting them into some sort of software to record what you've been spending and what you've been receiving. And there are two sides of the coin. One is the invoice side, which creates your profitability. And then the other side is the spending and receiving of money. And that's the cash flow side. And that's, you know, people get confused all the time. Directors get confused all the time between profit and cash flow. They think they're the same, and they are not. You know,
before we dive into anything else, give us your explanation of the difference between profit and cash flow.
Okay, so profit and loss is literally the cost without VAT of your invoices to clients, the suppliers' invoices. It's the, have you made a profit? So I've invoiced a client, let's say £100,000 without VAT, and I've spent 80,000 without VAT in staff costs, in overhead costs, and the outcome is I've made 20,000 net profit. net profit, they call it, because you haven't been taxed by HMRC on that profit. So it's net profit before tax. So 20,000 profit for the year, I'm going to get a tax charge, and the rest is profit after tax. And from that profit, I can even take some dividends. But cash flow, which is so important, is the bank side of bookkeeping, the reconciling of your bank statement, making sure everything that's on that bank statement is recorded in your account. So you know at any point in time, well, I've paid that invoice, or from a credit control perspective, I haven't received payment of this invoice from a customer yet. It's beyond their 30-day payment terms. I better chase this. I better do some credit control. So that's the cash flow side. And it's so important to know the peaks and troughs in that cash flow, because the worst thing you can have is you've had a good month, you've been paid everything up to date, and then you get your tax bill, or you have to buy a piece of equipment, and you think, oh, but that's going to wipe out my cash reserves. How will I pay for the rest of the following months until the next client pays me? So having visibility of your cash flow is important, as well as your profit and loss.
Well, can we, I'm going to come back to profit and loss, but let's talk about cash flows, right? People should have a rolling 3-month cash flow at all times, okay? But again, I will say that you're saying cash flow forecast, and people are going out there going, yeah, I haven't got a clue what you mean. Give it to me, caveman style. What is a cash flow? Can I do one on my own?
Okay. Some people do cash. It depends on how much money they've got in the bank as to how often they do a cash flow forecast. A cash flow forecast is literally looking at what money is expected in. I've sent these invoices out. When is the money going to come in? Now, if it came in as per invoice terms, it would come in at 30 days after that invoice date. Great. I can put that on paper. I know what I've invoiced. I know what I'm expecting and when I'm expecting. Some of those customers might have different payment terms. Some of them might be on 45 days or 60 days. Factor that in on your piece of paper or on your spreadsheet. Then on the flip side, you've got expenses, expenditure. You've got staff costs. Well, you pay your staff monthly at the end of the month. Put that in the amount that you pay them after tax based on what you know. Say, for example, they're on the same salary every month. This is what they got paid last month. Right, I can put that figure in. But you also know, well, that wasn't without tax and NI I paid them. So I need to reflect in my cash flow that I'm going to pay HMRC PAYE, but I get payment terms on that. And one of the few things HMRC give you, 21 days after the month end to pay it. So it doesn't have to be in the same month that I paid the wages. I can put that into my cash flow 21 days later, or a month later if you're doing it by months. Overheads, well, some of them you pay them in the same month that you incur them. Others you don't have to pay suppliers for 30 days after you've incurred it. So again, put that into your cash flow. I've got all these supplier invoices, but actually all of them don't need to be paid till next month. Or I've got some staff expense claims. Well, I normally reimburse them within 7 days, just to be fair, because they're out-of-pocket expenses. So I'll put them in the same month as I've incurred them. Before you know it, you've built yourself a cash flow forecast by month. I would never probably go down to weekly unless cash flow is tight. And you've got visibility then of where those peaks and troughs are. You know you have to pay your corporation tax bill 9 months after your year end. Put that in, even if it's an estimated figure, then you know, right, I need to do some heavy credit control to make sure all my money's come in on time before that bill's due. You've got a quarterly VAT bill due. You know when it's due, 1 month and 7 days after the quarter end. Put it into your cash flow forecast. You know, even if it's finger in the air based on the previous quarter's VAT bill, it's a starting point, isn't it?
And again, obviously, yeah, you can do this. You can get a spreadsheet and you can try and knock it up. Or really, it goes back to, what more can your accountant be doing for you? And when you find it's not going to cost a great deal more for them to help you with this type of thing, Varsha, is it? If you've got that type of relationship, you're a good client. Let's just go back to profit and loss. Okay. So for me, I do it once a month. Okay. 7 days after the month end, I expect everything to be as it is from our in-house bookkeeper. I click it and I can make better decisions when I'm looking at my profit and loss. So can you just explain to people what is a profit and loss? What's the importance? How should they be using it? What decisions can they be making on the back of an accurate profit and loss?
Okay, so there are two ways of looking at profit and loss. You can actually just, as you say, put your books in, record everything, run a profit and loss report and say, right, that's my profit or loss for the month. But what an accountant will do, or a management accountant will do, is adjust those figures. They will make adjustments for advance payment information for expenditure. So for example, I work with an events business, so they're often having to pay in advance for booking the venue, or for example, so why would you show a profit and loss with that venue expenditure in the month when you're not actually going to have the income from the event until 2, 3, 4 months later? It's about matching the income and the expenditure in the same month that they should incur. So those little adjustments are one of the things that I do when I do management accounts or profit and loss accounts. I make those adjustments so you can actually see, well, actually this 30,000-40,000 pound profit for the month is actually nearer 25,000 because we've got some invoices that were in there that don't relate to this month at all. They belong to the future. Or I've just paid my annual insurance. Some people take the view, let's just have it in 1 month every year at the same time. That's fine. Others decide, let's spread it because actually I'm paying it by direct debit. So let's spread that invoice or that council tax or business rates rather over 12 months. Show it evenly, spread the cost as in the same way that it is being incurred, really. So yeah, a profit and loss, it can be seen in two ways. Just from the raw data that was entered, run your profit and loss, or actually adjust it so that it's the true, what I call the true profit for that month.
But the key thing is you've got to have something, haven't you? You've got to have something there to be able to make better decisions in your business. Otherwise, you're flying blind.
Yeah, and if you consider example, I work with the construction industry a lot, so you've got jobs that are being worked on that might be a small job in 1 month or over 3 months, but having visibility of whether that job is actually making a profit is so important, because often, you get clients that say, can you just do this as well, or do that, and just amend this bit and do this. And before you know it, you think, well, I didn't actually charge them for that. And now I've made a loss on that job.
Yeah.
So you need to have a profit and loss to actually see whether you're making profit margins on the jobs. And when I say profit margins, we're not talking about profit after all your expenses and overheads and staff costs. We're talking about top level profit on a particular job, the fee earning part of your business, knowing if you've made enough profit to then cover all the overheads that are going to come in every month.
Because people don't realize, do they, if they've not got a grasp on absolutely everything that's going out of this business. And I see it in construction a hell of it. Certainly these last few years, I think sometimes when things are good, you can wing it to a degree. Okay. But in 2025, things are anything but good. It's really hard out there for a lot of different sectors, no more than construction, where, you know, costs are going up, demand's going down. You know, we've got the increase from the budget in April that's going to really hit people's bottom lines. And if you're not tight on these numbers, your whole business is going to fall apart. And some businesses are going to fall apart, but if you understand the numbers, you've got more time between an insolvency and actually getting advice and having a look at what options that you've got available. Again, we cannot stress to people how important this information is. And you can't delegate it and just go, oh, my accountant deals with that, because they don't. Most of them don't anyway. You're going to have to pay them for that privilege, and you've got to engage with them as well.
And one of the things a lot of my clients will say is, or the reason maybe they've changed to come to me instead of another accountant, is they want proactive advice. You know, they aren't afraid to pay extra for that advice throughout the year, but they don't get it from the accountant that only wants to do their year-end accounts. They want to have it, and they want that support in their business. And one of the things I have, whether it's a good or bad thing, I don't know, is I work on a retainer base as much as possible with my clients, which means I invoice them quarterly, but they pay me monthly. So from a cash flow perspective, it works for both of us. I've got a quarter's commitment, and they know exactly what they're spending throughout the year. But when they're on retainer, they also get to tap into my knowledge whenever they want. If they want to make a quick phone call to ask me a question or send me a message on WhatsApp, they can, and it doesn't cost them extra. It's part of having a retainer. If we're having a meeting specifically for a reason, that's different. But if it's a quick question, Varsha, what do I do with this invoice? Or Varsha, what code should I be putting this to? Because they're doing their own processing of their books. You know, I haven't got any issues answering that. And that, I think, gives them some reassurance, you know, that they can tap into me whenever they need to ask me something without the worry, oh, every time I speak to Varsha, she's going to charge me. So yeah,
and it's an investment, isn't it? It's an investment in getting things right.
Yes, exactly, because if they get it right, then I won't have to unravel it when I'm doing the year end. And you know, I actually do monthly balance sheet reconciliations. I don't want to get too complicated with my terminology and such, but all these little control accounts you have for PAYE or VAT or even staff wages, for example, it's very easy to just leave it till the end of the year and then reconcile it all and suddenly think, oh my gosh, I missed a payment for my pension, or I didn't pay my member of staff the right amount, or something like that. And I do monthly ones. So there are no surprises by the time the year end comes, because everything's reconciled. I know exactly what's missing and what's not. And I can say, oh, by the way, did you know that direct debit for the pension was missed? It didn't go through. Or so-and-so was underpaid 20p on their wages, you know. But you don't have to wait till the end of the year to do that. It's something that can be done monthly, and it doesn't cost a lot extra. It saves time at year end, because you've done it monthly. And yeah, one of the things I do, I work with accountants. I work with high street accountants. They have referred me in to help their clients with the day-to-day. And they know when they get the year-end books to do the statutory accounts that, well, Varsha's going to have it in good order and all reconciled, and it's going to make it a lot easier. So,
and that's it. I think it will surprise people to understand, Varsha, that a high street accountant will bring you in to work alongside them. So listen, you do all that stuff as well. I know you
Yeah.
do the statutory stuff, but it's trying to hammer home to people that there's so much more certain individuals can do for you, especially people like you, Varsha. And if you utilize them, if you invest them, what it does, it allows your business to, listen, it's hard out there. 2025, business is hard. The economy's in the toilet. You know, there's no good news. You have got to get tight with numbers. And I want to move on to that. You know, Varsha, 2025, what are you seeing out there? What challenges are you seeing directors face?
I think a lot of the challenges are, as you say, the costs are all increasing. People are holding on to their money for longer. So even if you've got a contract that says you should be paid on 30 days or 7 days or 45, you're not getting paid on those terms. They're holding on to their money. They're paying you later, which affects your cash flow because you still got your monthly bills you need to pay. And it's a big challenge for clients. As well as that, their profitability margin. I was talking earlier on the construction industry, with labor costs going up, material costs going up, clients wanting more for their penny. You know, it's shocking actually. Since lockdown, since COVID, how much margins have been squeezed, and yet they're still supposed to try and make enough profit to pay wages and premises costs and overheads and make a profit at the end. It's just really difficult.
But one of the craziest things I've heard, and this was credible information, really big contractor going to site at -5% on the hope they're going to get the money back on variations.
Yeah, it's just their customers or clients are finding it harder to say no to projects, even when they get such a small margin, because they think if I'm not on that preferred list with that particular customer, then I won't get any other jobs, any better margin jobs. So I have to say yes and hope that they then pass on the better ones. And it's really sad. It's actually really sad that it's become like that. And you know, customers out there know that they can do that. And you know, it's a very different world we're living in now, isn't it?
Now, sort of, we were talking about construction and that, how, you know, people are going on and they're taking on these jobs. And I really feel that it's important when to learn to say no. And like I can always relate back to my experience. There was once upon a time I would drive down south 4 hours there and back for a liquidation. Wow. We were billing someone $4,000 for, and the actual net profit on that was about 300 quid when you factored everything in. And I was out. But I was so desperate to get the work, you know, to sort of prove myself. And I think there's that. You've got to do that hustle sometimes. But there's got to be a cut-off point if you're a business owner when to go, no, that's not right for me. And for me, I think it's when you know your own worth and you're like, you know what, I'm worth more than that. Or do you ever get a client and you just think, these are going to be an absolute and you get that spider sense, don't you? And I've had them where it looks a good job, that there's just something saying, Chris, don't do this, don't work with this person. And I've always had that, and sometimes I've ignored that, as you can see the pound signs, and then it always comes back to bite you on the arse. There's something in here that you've got to start trusting in business, intuition.
Yeah.
What are your red flags for clients? What instantly scares you and puts you off?
I think if they suddenly stop communicating, responding to messages, over the years, it's a funny way of saying it, but I've trained my clients to try and send me their information monthly, because if it's sent in monthly, I can keep it up to date monthly. We can both be in a routine. And, if they then have any questions about their accounts, I can answer it because I've got the information. But when they suddenly start taking longer to submit their books, or they don't respond to a question you ask them about the books, you start to think, well, it's starting to be a bit harder to do this. And we all have peaks and troughs in our both personal lives and business lives, and you have to factor that in. But when you're driven by quarterly deadlines like VAT returns due, and you're suddenly having to, burn the midnight oil to get this VAT return submitted on time because the client didn't send you everything on time or sent it last minute, you start to think, well, is this right? Should I be doing this? Is it fair? Because I also then have to give them a very last minute notification of how much they have to pay. So it goes full circle, that delay. So it hasn't happened often, but on the odd occasion, I've sort of, like you said, you get those sort of spidey tingling sort of notifications that say to you, something's going on with this client. I need to maybe ask them or have a face-to-face. Are they okay? Is anything distracting them? And can I help? Is there anything I can do to make it easier?
Because you can't be more bothered than them. I mean, someone once said to me, he said, Chris, if someone shows they care, I care.
Yeah.
But if they don't care, and I've had that before, like where I'm going home and I'm like really stressed about a job because, Armageddon is coming over the hill.
Yeah.
And I speak to the director and they don't care. I'm thinking, why do I care then? It's like,
it's your professionalism, isn't it? You have your work ethic and you want to maintain it and you want to continue to provide that to your client. But sometimes it's not possible. If you don't get the information on time, what can you do? What can you do? It's out of your control.
You've heard this, you can lead a horse to water, but you can't stick their head in and drown them.
Exactly.
And that sort of leads me, Varsha, I'm conscious of time. I've had you for an hour. We're coming up to an hour now. So I just want to sort of end on this. If you could give any director one nugget from your many years experience advising companies on how to be successful and how to be sustainable, what would it be?
I would say, start the year as you mean to go on. Set a plan, put it on paper, and as a minimum, use that to direct you and guide you through the next 12 months.
Brilliant. We're going to put all your contact details in the show notes, but for those that are still listening, where can we find out more about Varsha and your company?
Well, my company, I have a website, so www.athenafmservices.co.uk. There's a lovely picture of me on there, which I really hate looking at, so I try not to. I also have a LinkedIn profile, which is under my name, Varsha Sababathy. Yeah, I mean, that's it really. And I have most of my clients come from marketing, from referrals really, so people who know me. So if ever you want to sort of know more about me that you didn't get from the website, you can always ask for a reference from one of my clients.
That's mega. Varsha, thanks for joining us. Have a wonderful day. You're a star.
Thank you, Chris. Thank you so much.